Welcome to my channel, guys. um this is another channel. This is another video, and the first one in the beginning of this year, and we continue what we started last year. And from where we stop, we continue the same approach, the same analysis, because as I said, this channel is not for me to teach you different things that will end up confusing you guys. So I've been able to learn SMC, and I've been able to narrow down the whole process and filter the noise so that anybody can learn it easily. So that's where I'm continuing this year. No more complication. I'm not going to complicate anything, but if you have questions, you can ask me. I'm going to respond to that. So I want to show you the first trade I took this year, which is this. This is GBP USD 1 hour time frame, and it plays out perfectly using the same approach. This is how I view the chart. Over the years, I've been able to see this pattern repeating itself. And I see that there's no point in trying to solve all the puzzle in the market. It's better I stick to just one pattern. And since this has been working, as I said in my previous video, I was able to use this approach, this model, to pass a prof firm 50k account. And for you to pass a prof firm, it means that you have been able to make let's say 4%, 8%, or 5%, 10%, approximately 12% in a month, or during the time of using or of trading the prof firm, because you have to pass the phase 1, then phase 2. So it's a very good outcome if you can make such percentage within the period of time. So let's dive into it. This is the trade I took, and I was able to make some nice move and have the very good outcome. So as you can see, it plays out very well. So this is what I want to explain in this video. So look at it. This is how I view the market. And as I said, it's very simple. This is a structure mapping. This is how the market move in terms of structure, and this is how I perceived it. So look at this. These we classify this as break of structure because of what make this valid is because market has came back from this level, which we call inducement. It break this level again. Why is this valid? Because market came for this previous pullback we call inducement. Then this is a break of structure. Some people will say this is a break of structure, but no. According to my approach, it's not. This serves as an inducement. I use the last pullback as an inducement, and I wait for the market to come to probably extreme, then I execute my trade. So it's that very simple. It's not that complicated. Although I know it's not going to be easy for people to start viewing the market in this way, most especially if you are a newbies and maybe you are new to SMC. But I think this model is very simple for anybody to comprehend or to learn. So let me show you what I first look out is I look at my daily movements. This is what I do. I want to see what daily is printing for me, and I see that the daily has been bearish for a very long time, since September. So when I see the movements in daily being bearish, I don't have business with buying this pair. All I do is to wait for my setup to align with what daily is telling me, then I enter the trade. I don't buy when the daily is selling. I don't do that. So in this case, we have a sell here. I'm not going to look for buy here. This is a temporary daily movement. I'm not going to look for sell in this movement. In this move, I'm not going to look for buy. So I'm looking for sell. So that's how I perceive the market until daily start showing me maybe a movement like this. Then I will start looking for buy, either for a long time or temporarily. So I don't want this video to be long. So as you can see, we are on daily setup and daily selling movement. So the market is selling. So going to 1 hour, all I need to look for is to look for this, a pattern that will give me this. I want to see market push down, give me inducement, push down again, and I want the market to take out this inducement and push down. So in this, once I see this, I can see that the structure has been completed here. So all I need to do is to wait for market to come back here, take out this level, because according to my approach, I know that this level must be protected. If market want to continue selling, it's not going to pass this level. So that's what I will do. Then I will come here, put my entry here, then target 1 to 3. That's very simple. So that's what I normally do. I don't look for anything. I don't complicate my approach. I just make it simple enough for me, so that if market, for example, if the market is selling, and let's say the market produce something like this, I'm not looking for buy. I'm not going to look for sell until I have this movement like this. I'm not still going to sell here, because I want the market to first create a complete structure for me. So then I'll wait for this. Once this level has been taken out, it has been confirmed to me that this is a structure. Inducement taken out, market breakdown is a sign that we are pushing down. So next structure for me is where I want to approach the market. So this is what I will do. I will take an entry from here. Positioning of your stop loss is all very, very important. So it's not that you maybe you look for another block here and you put your SL here. No, you make sure you put your SL at the top of the last structure the market created. Most people will be like, okay, maybe I will be risking 60-70% of the market. No, of this thing. It doesn't matter. What matter is position your stop loss where it's supposed to be. That will prevent your capital from being blown off from your trade from eating SL. Then by doing that, you will be rest assured that if market goes your way, then you make some money. But what about if you put your stop loss here and market push up a little bit, take you out, and now come down to your direction? It's gonna be painful. So what I do is, I don't care how much market want to give me. I'm targeting just 1 to 3 and putting my stop loss where it's supposed to be. Not that I'm thinking that, okay, if I put it here, I will be making maybe ratio 1 to 8, 1 to 10. Those are bullshit. I've done that before. It doesn't work. So this is what I do. I put my entry here like this. I put my entry here, put my entry here, put my stop loss here, and I target 1 to 3. I have a method of managing my trade, so that's not going to be a problem. Immediately market get to this break of structure, I know that it has completed a structure. So what I do is I move my stop loss to break even. So if markets want to come back and take me out on break even, so be it, because I don't naturally take partials. So you see that break even, stop loss, so that it will make me to be decisive and know how my setup actually performed. So some scenario, you will see markets will give you this pushback when it's almost about to hit your TP, then will now later come. So I understand that this pullback is necessary, so I don't panic, because I know that this pullback will serve as our new inducement. So after I close this trade, TP hit, I'll position for another movement. Let the market come here, then I'll place another trade. Then we'll follow the same process. It's just that simple. I don't stress myself. And in this scenario, if market refuse to come here, maybe market do this and drop, I'm not going to jump in. I will believe that market created another inducement. So I'm not going to use this as an inducement. I will use this. So if the market come back and take it, if my other block is here and market refuses to mitigate it, I will let the trade slide, because I can't take a trade here and put my stop loss there. It will be too wide. So the wider the stop loss, the longer it will take for your TP to hit. So I want it to come closer so that I will be able to have not too much stop loss. Then my TP will be hit as soon as possible. So this is just how I approach the market. I don't stress myself anymore, because I've been able to simplify the whole thing. I just want to see this pattern. This is the only pattern I want to see. And once I see it, I know that it's high probability. But note that this pattern must be in the direction of daily time frame. If daily is selling and eventually these markets give me change of character, because anything that pass above here we classify it as change of character. Let's say I was trying to sell here and market push up. Maybe I'm picking a loss here, which is called valid loss because I had a loss following my rules. So in this case, I'm not going to buy here because market has given us change of character. No, I'm not going to buy here. I want the market to do its thing. Then after that, I want the market to do its thing, maybe buy to the up, because I know that this buy might be a temporary move. Sure, you understand? Because it's moving against the flow of higher time frame. So I will wait and allow the market to do what? To give me a structure that will come back to low. So because market created another structure here. So once the level have been taken out, then we have a chalk. So let's assume that this happened. Then we have a chalk here, which is now telling me that market is about to continue in the direction of daily time frame. Then I can now proceed by waiting for this to happen, place my entry here and sell to this level, because market has signaled to me that it's about to move in the opposite direction where it was moving before. So it wants to align with daily time frame. Look at it. This change of character here. Market was selling and suddenly changed character to the upside. This is a setup, but I don't trade it. I want the market to turn back to the direction of daily. So I will just ignore it. I will be marking it. I will ignore it. The moment I see change of character like this, align to the direction of the daily, then I will approach the market the same method, the same approach. So all you need is this. You don't need to just understand this structure, this pattern. It repeats anytime, any day in the market. All you just need is the right psychology to play it, because sometimes you enter the trade and market takes some days or 1 or 2 days or more to play out. But since you understand the game, the movement, the pattern, you will not have anything to worry about. So this is all you need to be profitable this 2025. I've been using it and I've seen tremendous improvements in my trade. I've been able to pass Profem. The Profem I passed December, I've already made about on 50k. I've already made 3%, which is what I'm targeting. I don't want more than 3% for now, because the goal is to scale up. So when I get 3%, I take payout, which I'll be getting payout in some days time. I take payout, then I use it to go for bigger account. So the bigger the account, the more easier it's gonna be for you to make good money. So this is the whole thing. And coming back to this, let me show you what really happened on the rechart. So look at this same thing I explained to you. So as I was saying, market was bearish. Let me start marking from here so that you guys will understand what I'm saying. So market was bearish like this, and the last structure that was formed is this. Okay, look at this. Market pushed down, gave us small direction here, push up, then came back and do what? And push down. So this is the last structure that was formed. Once market passed this level, is a change of character. And look at it. Immediately, market did a small pullback here. This is the major pullback that the market did. So, and you see market coil up and mitigate this. So this trade will have been my entry. I will have entered above this level like this, then put my stop loss here. Sure you understand. Then target my 1 to 3, because I understand the whole process, how the market moves. So look at this. We have break of structure here. We have break of structure here. Sorry. We have break of structure here like this. This break of structure. Let me remove this to avoid confusion. This break of structure. Now our last high is here. Once market take out this high, what are we having? We are having change of character. So where was our last pullback? This was our last pullback that the market did. This was the last pullback that the market did. So I was observing what market is going to do, because this is supposed to be where I'm going to sell like this. So this is exactly what I was talking about. So I have a loss here. I didn't take this trade because maybe I was not on chart or something, but I knew that if I'm seeing this, I would definitely have a loss because I will take the trade. So now that this happens, what am I looking for? I discovered that we have a change of character here. So temporarily, market wants to give us a movement to the upside, which I said I'm not going to be interested. And you see market came back for inducement and move to the upside, which give us another structure here. So when we have that, all I do is to just follow the trade, the market. I don't want to buy, I only want to sell, because I understand that the overall movement is sell. So all I want is to see this market come below here, because this is the last low that the market created, because all these are just internal move. This is the last low. This will be our last pullback, which serve as our inducement. So you see market came up, but market was unable to create another structure, and I was looking at the way market come down and gave us a change of character here. So now market has signaled to me that I want to continue in my bearish movement that the daily is doing. So all I do is come here, look for my inducement. Look at this, look for my inducement, and if I have a POI here or here, let's say with this, so in this case I'm not going to enter this trade because market refused to come to my entry. So I leave it, I allow the structure to form again. So look at this, another structure form, another structure, which I'm waiting patiently. Now this is not valid again. So anything above here, we have change of character. So now look at what the market did. Market actually push up, refused, because this will serve as our inducement because it's the last pullback. This is just a one leg. So market push back and flash down again. This is not a structure because no inducement was involved. So as I was looking carefully, I discovered that we had a very small pullback here that the market created. So this serves as our inducement. And market did what? Market coil back, then flash down. Nice one. I was looking because market hasn't meet my criteria. So we have another structure here, where then this high will now serve as our what? As our change of character if market come back here. Why is this like that? Because market had a small inducement here. So now I understand that this is a change, this is a break of structure like this. This is a break of structure. So and this is the high that has to be protected. So what am I supposed to look for here? This is exactly how I catch the trade. So I look for it. I saw a very tiny pullback here, and also identify this as a major pullback. So but what matter is whether tiny or major, market must take out one. So exactly what I was positioning for, which is this. After this inducement taken out, I noticed an order block here, but with a fair value gap. So I like to always cover my fair value gap at least a bit if it's not too much. So I knew this. So I know that this is a proper setup I was looking for. Look at this. The same thing I explained. Market gave us this move like this, push back, collapse, create, market gave us this move like this, a little bit put back, then push back, on its way do all this internal movement, finally push back, push down. So we had an inducement somewhere here. It means that market must come back for this high, then mitigate my move, then drop. So exactly what market did. This is not that difficult. You just have to be patient. Look at this. I was not taking trade here because my criteria was not met. Not that the market is not playing the structure and moving, but my criteria, so I was waiting for that criteria in my setup and I will strike. So immediately I saw this, I saw that market try to sweep this level, and I look at it that, okay, if I'm taking a trade here, where my stop loss supposed to be is here. So that's all. How many pips? 81 pips, no problem. I can bear that. So, and I target 1 to 3. It's not that difficult. So look at it. Because I know that there is an order block here, I use my stop loss to cover it, because that day I think I wanted to go out and I don't want to miss this trade. So I enter here. I can allow the market to play in my negative zone by mitigating this stop loss. I don't have problem with that. And boom, you can see what happened. Market flashed down straight. Look at this. Immediately market flashed down, remain few pips to hit our TP. If you are panic and you don't know what you are doing, all I did that day was to just move my stop loss to break even. That's all I did. And if you are panic and you don't really know what you're supposed to do, then you will have closed this trade here without hitting your TP. But because I know what I am supposed to do, I just had to leave the trade and allow it to play out. So by the time I wake up, then boom, the market just flashed down and hit my TP. So this is exactly the trade I took. It's not that deep. It's not that difficult. So this is how I took the trade, and this is the explanation I just give now. So look at this. So, and this will continue. Now, what am I looking out for in GDP USD? This level now stand as my inducement. This level will stand as my inducement. I want the market to come and take this level, but where am I selling? This is going to be the entry point if market come back here, because by then I will have had this movement, then I will sell again. So this is what I will be waiting for patiently. I will also look for daily movement and see whatever daily is doing, whether we've reached where we're supposed to be looking for buy, or stay away from the market a bit and allow the market to do its thing. So this is all it's all about when it comes to my approach. Look at it. This is exactly what I explained to you. The same thing is what I've been explaining over and over. See, the point is there is no almighty strategy in this game. All you just need is to just follow one thing repeatedly. That's what is called consistency. When you are now using that strategy, it might not be this, it might be any other strategy. But when you are now using that strategy consistently, that's when you will be seeing the flux. You will be able to remove some kind of things that is, that is not making you profitable the way you're supposed to be. Then you will now be the master of that strategy. Once you master it, you have confidence on that strategy. The way I am now, I have 100% confidence on my approach. I don't care how much am I putting in the market, what the market is doing. NFP, I don't give a fuck about all those things. Yesterday, NFP, though this market hits TP before I actually before the NFP, so I don't have problem with that, because I believe once your technical is correct, the fundamental will just act as a catalyst. I had a trade on CHF, but maybe in the next video I will explain that. I don't want this video to be too long. So that's it, guys. If you have any question, feel free to ask me. At this level, I'm more available to answer much question as soon as possible, because I'm excited that I was able to come up and narrow down all the noise in the SMC to this just simple approach, easy to follow, and once you master it, you also see that it's reasonable and it's not that difficult to follow. But it takes time. You just need to master it and start looking for it in the market. So once you have this idea, you can take a look at it, go and look at the other chart. I trade multiple pairs because I don't see pairs. All I look out for is my pattern on those pairs, and I take them. I don't really care about them. So the only thing that I care about are the pairs with high spread and so on. So majorly I go for USD pair and some low spread pair. So that's all. So you can look at exactly what I said. Go on to any chart and go and be looking for it. You will see this pattern repeatedly over and over. Time frame doesn't matter, but because me I master 1 hour, I'm kind of close to swing trader, so I can leave my trade to run as long as you want to run. I don't interfere. So that's why I'm using 1 hour. If you use 15 minutes, if you use it, it works. So you just need to understand the time period that resonates with you. So that's it, guys. See you in the next video. Thank you. Bye.